Hello, I'm Peter Towers, Managing Director of ESS BIZTOOLS. Welcome to today's update on business advisory services. I want to continue our theme of looking at what accountants can do to diversify services. And today, consider tradies charge-out rates. Around Australia, most accounting firms, especially the small, the medium-sized firms, have tradie firms as clients. And traditionally, the service provided to most of them has been the preparation of an annual set of accounts and a tax return. But there's a lot more that accountants can provide to help that tradie business grow and expand and add value. And one of the key requirements is to make sure that the charge-out rate that's being used for the various labour classifications within the tradie business is appropriate. So where do you start? Obviously, you need to have a list of who the team members are and what their wages are and what their expected work hours are and any special leave arrangements that are granted to them. What's the labour on cost? We have superannuation, we've got holidays, the various types, annual leave, personal leave, and so on. And what's the expected productivity for that classification of employee, or even perhaps that individual employee, if they've got special other responsibilities? They might be in charge of the apprentices that the business employs, and the owner believes that they should be given some leeway in the expected productivity to be achieved. And it's no use setting productivity percentages too high, because that will distort the charge-out rate. So what's the realistic one? You need to go back and look at some past information. The business overheads are very important, and they need to be the overheads that it's believed will apply to the turnover that the business is going to be operating around. What's the policy on the markup of external purchases being made for clients? Now, some people will tell you they're marking everything up 10%, but when you look at it, you find that they're missing half of them and they're not really getting a 10% markup on external purchases, but others might be getting a bit higher. And then you then need to determine whether the client wants to include that surplus within the calculation of the charge-out rates, or do they want it as a special income item? They can so you can either include it or not include it. And then the profit that the business would like to earn, then perhaps that's calculated on what the investment in this business is or what the owner believes his profit should be. And that will then give you a charge-out rate, which you can compare to current charge-out rates and perhaps what you think competitors are charging, and then determine the charge-out rates to be implemented. I think this process needs to be verified each month, or at the most every quarter. Calculate the actual results so that the charge-out income generation is evaluated to see whether it's going to be sufficient to generate the profit that the business is targeted. In this way, the accounting firm is offering a 12-month service and is meeting the client perhaps monthly, or at the very least 4 times during the year to review information. If you'd like to know more about the charge-out rate calculator that ESS BIZTOOLS has developed, please go to our website, www.essbiztools.com.au. Have a great day. Goodbye.